think what we're going to see is a commitment towards additional sort of channels, ad supported, not least the most important. You've seen Disney Plus sort of moving that way, announced earlier this year. Obviously, Netflix is putting a lot of resource and energy behind the ad supported tier. So I think you're going to see streamers look at these alternative sort of monetization channels before we really start to see anything by way of sort of meaningful consolidation. So I think the ad tier is something for sort of the longer term that's still pretty exciting for the business.
What do you think of the Netflix valuation now? I just put up a comparison with Walt Disney, thoroughly expecting Netflix to trade an excessive price earnings, but actually it didn't look that. So is all the bad news with potential subscriber hurdles and road bumps to come, is that all in the price at the moment?
Really hard in this sort of market to say what's priced in, but from an operational perspective, there's certainly a lot that Netflix is doing that's really interesting. I do think ad monetization could be a really big thing for the business. It's going to be a couple of years before actually we see that ramped in a meaningful way. They're going to start out exploring with certain markets, but where people have pointed to concerns around subscribers maybe churning down into a lower priced ad supported proposition, you have to obviously look at that or the other side of the coin where Netflix is potentially monetizing those through premium adverts. The subscriber base, although we often, we do speak of churn very frequently, almost every quarter we're speaking about, how many subscribers are churning. Underneath all of that, they do have a very, very engaged user base of around, 220 million plus global subscribers. And advertisers love that. They love an engaged audience. They love an engaged audience that's spending an awful lot of time on the platform. And Netflix continuing to grow its share of screen time means it's scoring well in these metrics that advertisers love. So, I don't think the company's going to have any issue attracting premium ads, premium CPMs. So that ad-supported tier could actually be very, very interesting. And management has even spoken to, the economics potentially being neutral to actually positive on the premium or versus the premium subscriber economics. Now they probably could have come out and gotten away with just saying it's too early to maybe tell, but that paints a very, very optimistic picture for the potential contribution that the ad-supported tier can make to the business.
Dan, it's not as simple as just rolling out some ads and charging some customers, not others. The company talking about whether some content will be included in the ad-supported tier. It does make me wonder whether the company is becoming unnecessarily complex for both customers and investors alike.
They've always subscribed to this notion of strategic clarity, and I think that's benefited the company very well throughout its history. The point around the IP, I think, might be somewhat overdone. Obviously, we've seen in the news, and it's been reported that studios are thinking about ways of getting basically Netflix to pay more for that content. They want to obviously have the fact that Netflix is potentially earning high margin advertising revenue on the top of their IP, reflected in the price that Netflix pays them. But bear in mind when the company has 60% of its content assets being produced in-house, or 60% of its content assets are originals, it actually has enough content to go to market with an ad-supported tier without using really any third-party IP at all. So it's in a very good position to negotiate decent terms that make sense for everybody involved. So I think that may be something that's not actually a tremendous risk for the ad-supported tier.